Hey, what's going on? Today I'm going to give you a synopsis of the current mortgage situation in America. You have 4.2 million Americans right now in forbearance, or 8.5% of all mortgages in the US. Also, you have 735,000 homeowners that went delinquent despite the forbearance option. The question is why? All tenants right now are protected at least up to 1 year from any evictions, any fees, or any penalties due to Donald Trump CARES Act. So if you want to know more information about the current mortgage situation right now, please stay tuned. Look, if this is your first time here, do not forget to subscribe. Hit that subscribe button, it's right below, to get more information just like this. So, here's the book of the week. The 5 Essential People Skills by Dale Carnegie. In this book, it tells you how to assert yourself, listen to others, and resolve conflict. In this book, it says that you can resolve any conflict or misunderstanding by applying a handful of proven strategies. As we all know, during COVID-19, Donald Trump passed the CARES Act stimulus bill for $2.2 trillion. Right now in Congress, they've been trying to pass another stimulus bill. We'll see how that goes. This policy, the CARES Act, this policy guarantees that any homeowner with a federally backed mortgage can stop making payments for up to 1 year if they are faced with COVID-19 issues. As we all know, the federal government has tried their best to help all those in pain, in financial pain during COVID-19. The problem now is that borrowers can delay their payments, but the mortgage service companies that have these payments are still on the hook to make payments to their debt holders. So the way it works is that these mortgage service companies accept payments from all these borrowers, and then they use that money to make payments to their debt holders. And the profit is what they keep. These are similar to what they call mortgage-backed securities. Now, these mortgage service companies most likely are uber millionaires or billionaires. So although they are complaining that they are losing money, but it really don't matter because most likely they're a billionaire. So the way the government has tried to handle this issue is to buy mortgage-backed securities. The Federal Reserve has been very aggressive in buying mortgage-backed security to add liquidity in the market. This will help stabilize interest rates in the industry to keep them low. So, a coalition of housing groups, we have the Mortgage Bankers Association and the National Association of Home Builders, have all come together. The government should establish a pool of liquidity that these mortgage service companies can use as a draw when they need money to pay their bills. I mean, look, when you think about this, borrowers are the ones that have a job and they may not have their job any longer due to COVID-19. They, in all earnest, want to keep working. Not only that, they could have been faced with other circumstances due to death of a loved one who was probably their sole provider, and now that sole provider may not be alive, sadly. These people deserve to have their payments delayed. These other mortgage service companies, I do think that the government should help them out, but that's second priority. That's a third priority. It's not the first priority. So now we'll talk about mortgage credit availability in the market right now. When we look at mortgages for investors, the loan to value has come down significantly. The loan to value typically is about 70 to 75% is what most lenders would lend at. Now, because of COVID-19, a lot of lenders, especially banks that lend specifically to investors, they decreased that loan to value to 65, in some cases 60%. this is a drastic decrease in the loan to value. What this means is that when you look for a deal, your ARV has to be 60%. This 60% includes the cost of construction and it includes the price of the property. Instead of that valuation being 70%, the investor has to look for better deals. Now, I think it's a benefit to both sides, the investor and the lender, because the valuation is lower, so it's a more secure deal. The only issue is it takes a longer time to find those types of deals. Also, sellers, if they really want to sell, need to be acceptable or willing to decrease their property to a point that makes sense to investors. Some sellers may not want to do this. Now, we are faced with a very difficult moment, so some sellers, if they really want to sell, will decrease their price.